accumulation. So that everybody who was selling over here and everybody who was selling over here is taken out. Why? Because soon as price comes down, what they needed to do, they get out of positions, right? So they position. So even when price comes down and they had to close, they even they've made so much money. They've made so much money coming down that there is literally no longer this level. This high is then no longer. Price comes out, takes that out, and we continue, and we then get a distribution phase to the downside there. All right. The cycle. Let me just see. Am I making sense? Everybody, page. Great. So see, we're all on the same page. Let's continue. Okay. Now comes how to get in market. How to finally get in on a piece of the pie. Finally get in on taking lows. Okay. So one must just understand the market cycle, right? So we obviously making highs and obviously lower lows. We are in a downtrend, okay? Or at least a minor downtrend for now. So now we look at our bias, okay? So you see, what must is price must take low in order to make it, or must create a new high, create a new low. You need to understand. Okay, price must, carefully, must. It is compulsory. Price takes out the high in order to put in a low, or low in order to put in a high. Price can go if price does not take out or low. All right. Okay. Now on the candlesticks, it's different, but what this does, it is an understanding of what I expect price to do. Okay. So obviously, price opened at this level, right? And price then see where I can't really see where price opened up. But anyway, this for the day. Okay, though, right, we this low and this high. Okay, we have this low and this high. So what am I anticipating here? What am I expecting price to do? Expecting price to take out, right? Though, as long as between the high and the low, the consolidation phase. Now the same thing as the market cycle. Consolidation phase, right? Until a high is met or a low is met. So same cycle. We're going to have a accumulation and then a distribution. So right now, right, we're getting in consolidation phase. So maybe we could see either taking out the high, right? Or we could even see New York taking out the low, which is highly, but could much be weak. However, though, right, if you're not sure what New York may not do, run to a lower time frame, because all this is going to print out more candles. Okay, so now, right, it's kind of like understanding of what price might do. Price breakout, right? Why? Because as I said, we in this consolidation phase, right? Price wants to obviously accumulate and then distribute. So we're probably going to see accumulate and then distribute. All right. So this is how the market works. This is how it's going to continue to work. And once you learn this, it's going to give you a much better is expected. All right. Don't understand that chart. I can then go to a one frame. All right. So showing me now. What is it showing? It's showing me now that there's liquidity. So we have these equal highs over here, right? That price obviously wants to take, because look over here, guys. Here we have distribution phase. Sorry, a consolidation phase. Price then distributes. Okay? Distributes. Price then distributes. And price then goes. Where does price come back into? Comes right back into that phase. Price comes right back to the consolidation phase. Okay? So in a situation, right, we could see a manipulation phase. A price touches and then, all right, touches, comes back into our range, and then starts to make its way. All right? Why? Because price needs to tell you who was at this level. Okay. Let's just see if this is making everybody. Am I making sense? Continue. Okay, so this is what I'm expecting, right? Once I'm on my 1 hour time frame, point of interests. So now that we have our range, so we obviously have our low of the day, and we have our high that is over here today. Okay, so you need to ask yourself is, one, is there news in order to push price lower? News this market will not lower and take out this low. All right. Two, right? What are we closer to? Are we closer out this level or closer to taking out this? So you need to ask yourself that, right? You're always asking yourself questions. It's always asking yourself, okay, this is so much closer to taking out. Why would they go low? Is that hard to manipulate you, right? or would use this level to manipulate you. Now we have a point of some kind of influence to the in order to push price higher. Oh, everybody's Marco, and Marco's saying price low and take out equal high, but instead goes lower first and takes out equal. All right, so you always think like they thinking. You know, always understand that price is just too close. It's just too easy to move to go and get those highs. It's just too. They might as well do it now. Okay. The point of interest and be like, okay, I would use this for information, right? And this higher because everybody's looking higher. We all looking for out that level, and for price to take out that level. Too easy. And one thing the market is easy. All right. So when a move looks just easy, there's definitely going to be a manipulation. And that's why you want to mark every point you can possibly see on this chart and you to get involved. All right. So price obviously wants to break. We can see that clear as daylight, right? Wants to take high, right? But also about these equalize. If you look carefully, please understand this. Right? Reason why price didn't out those highs, they in this level for manipulation, right? They're using this level to induce buyers believe it's going to go higher. Price finally goes a little, tests that high, collapses into this level for price to then take out that high, this level as a manipulation. Because think, if they wanted to take taking it over here, why over here? And then take these highs, taking it over here. Use this level to manipulate you guys. All right. Use this level to manipulate you guys. That is why we have like this with interest. There's some kind of a value gap, you guys want to call it, insufficient, that they would want to use, right? So would probably a little higher, lower, and then finally manipulate everybody, right? Because everybody started to buy this level. We're thinking, oh my gosh, for those equal highs, we're going for this high. What happened? Price makes you believe they're going down, right? Takes everybody out trying to buy early at this level, takes you out, and then right. Let's just make sure that we do. Are we on the same page? Let's turn the camera and get back into this. You see, I'm going to be honest. There's nothing you could possibly get on more than a gap in the market. We can speak of these, right? Every time price comes to any level, be it a flip zone, be it supply, be it, there will always be a gap in the market. There will always be a gap that we want to tap into. There will always be that price wants to tap into. I'll make an example. Over here, once price distributed, right? Once price distributed, it created this gap. People would say price would now, right? Because we have a demand now. Supply price lower, right? Why? Because supply was obviously stronger and demand started to play a part at the bottom, which is good. However, though, we also have this gap in the market. There's also this it's coming into. All right. So as much as price comes into a level, 100%. But one of the most things in this market to either turn a market or a gapping in the market. And there are just sellers, buyers in the market and price fair. Right? To be fair for everybody get to buy or sell position. Okay? So when we have a in the market, fair. That's why the to come and fill chance. You understand? Because the sellers gap, there's always buyers. They'll fill that gap, then we'll have accumulation before that distribution. Okay. Just how it works. Don't ask me how, why, right? So into a flip flips. Right now, are calling this a breaker and block and that order block. I'm going to be honest with you, they are actually just flip zone. Okay, now they are level. Our supply changes into demand, turns into supply. Supply is extremely strong, and we then get a distribution phase in this market. So many people do different things, but who have been in this industry now and has done a lot of backtesting, a lot of knowledge on the will tell you that I have just created names for all these things already been here many years to come. And many years. All right. So all these new names are new to us. I call it the way it is, and I'm going to call it is, right? This is a where price turns from a supply. So we had a to a demand, a supply into a distribution. And this is obviously the cycle where price will come consolidation bar and then start distribute. Okay. So obviously we can see now that price is starting to show momentum to the side, right? We see the next candle down lower. Even if the next candle, right? Let's look at what happened over here. Okay. So price of the high fails to take, then finally takes out the low. Okay. Price takes out the low, taking out a low, take out. Look at this. It's taking, listen to this again. Taking out a low, it didn't. So if price up and take out this low, okay? Doesn't take out this low. Right? Price doesn't take out low, okay? What happened? It went up before this candle came, right? The candle came down. Price made this low and continued here. So there was unfitting. So all the people came down, price made this low and continued going higher. So unfair price came down, price made this low, going higher. So the fair price, or rather, okay. So voucher came, protected this low, came down. So obviously these lows are now protected, right? So protected, finally came down and took out that low. So we look for interest, look for a reverse pattern. A reverse pattern basically sitting right. So this would make sense. This reverse pattern to then push down could be a reverse pattern in order to then price down, right? Even if it just taps in, right? Even if it just taps in, okay? That would give them more than enough time to then push price higher. Is it making sense? Remember, a low gets protected, so they've eliminated enough orders to no longer protect that low. All right, let's get back in. Okay, so this could give an understanding of what price wants to do. All right, however though, right, what people need to understand is we have a zone. So if you look, price is already this level. Now, many people would say price came into a, but really it just came into a flip zone. Okay, so price came into a flip zone and this left price to higher. All right, so the zone will no longer hold. Okay, so you need to understand this will no longer hold, and that will be a low to protect. Okay, so this level will no longer hold. Flip zone, it's used once. It's our to demand or demand to supply, whichever way it is, and price breaks through, so we look for an interest. So the zone has been used up. We use a breaking of that flip zone, so out of that flip zone, and we price pushing up. So that we understand a market cycle, we understand that lows are protected, right? Highs and lows are protected. They've come to their point, until they've come into their supply zone. So let's say our supply zone is here, right? We are obviously now looking for distribution. Okay, so supply turns into demand, demand then distributes. Okay, am I making sense? So our supply, the demand, distributes, we accumulate, and price then goes higher. All right. So this is the market cycle. This is how. However, though, understand what candlestick is doing, guys. Understand this, right? So always do this. Mark out the high. Okay. So price has not taken out the high. Always do this, right? It has not taken out the high. It's taken out the low. Okay, only so now. Okay, so we're looking for price at low, and then either price goes high or price comes for. Okay, because these lows are protected, right? Continues to come in and then slightly go high. So what we want to look for now, right, is the candlestick either takes out this low or takes, or the next candlestick will take low, right? This low, if it doesn't take out the low, hitting this low, which means that price can go higher. If they don't take out this high or this high, they protect. Protecting highs means they haven't accumulated enough positions to liquidate themselves at this level. Okay, so when highs and lows, it's because they haven't accumulated enough positions in order to get themselves out of their own position at these highs. That's why I take the highs, because the big boys are sitting at these highs, right? The boys are sitting at these highs. They need to accumulate enough positions, make enough money so that when they finally get to this level, they can even and take their positions out over here because they've accumulated so much going down. So they will continue to protect the lows or the highs until that obviously. All right. Let's see if this is making sense to these people. All right. So now, if they protect in the, we need to see why they protect in the low. How do we see that? They took the low, they haven't taken the low over here. So I want to see what's happening within this candle, right? And is there to be an understanding of this candle to take out this low or hit the low? We can go to a lower time frame, 15-minute time frame. You see, they distribution phase. They distribute. So we want to see that we have an understanding that they're going to take out this candle. Okay? They want to take out this candle. Taking out this candle, they're taking out this. Okay? Next candle will then show you if they're coming slow. So each time you don't understand, look at what the candlestick is telling you. Okay? So price is very close to taking out. If they take out this low, they would take out this low. Okay? They were so close to taking out this low, price go higher. Everyday people. Because everybody, okay, boom. So now they've taken low. Okay? That low has been taken out. We're going to manipulate. We're going to make everybody believe that price is going to go. So everybody gets into positions. Supply turns into demand. Demand turns into supply. Price goes higher. But you see, there's just too much between here. You need to. There's just so much space between here and here. And if we look at the time, we're not in the New York session. Okay? So everybody's price is going to buy now. 100%. In the time frame, everybody's like, let's get it. Price is going to go up. Price is going to go up, right? I'm sure you guys are like, buying this market. Are buying this market, right? If you're on a one helping, you're like, hey, we are buying the market. Why? Because they are going to protect this low, right? Not understanding that the market cycle allows. The market cycle allows for this. We expect price to come back because this is the market cycle, right? Accumulate, distribute, right? So it allows for this. The market allows for this, but if we have a higher time frame, right, expecting price to come into some kind of understanding for a distribution. We have a fair value gap. We have a gap in the market. And I've already told you how important the gap in the market is. Right? It hasn't closed off, so we see how big this gap is. But should the next candle close in the next 10 minutes, so price could easily come, right? We look at price out this high and continuing lower. Am I making sense? Let's see what I'm doing here. Okay, there we go. So remember, price out that high, taking out the low. Okay. Okay, let's turn off the. Okay, so obviously now wants to take out that high. Why? Because the price took out the low. So price, we had a distribution and accumulation. Right? Market cycle. Just on two candles. Market cycle. All right? So because lower, right, we want to take out, right? Price may not take, right? This be a trap into everybody believing that price is going to go high. All right. Once again, they protect the high. All right. Protect the high. Let's see if they are protecting the high. What do? We take this candlestick. And we look at on a lower time frame. Okay, take that candlestick. Look at price action on a lower. Okay, see now that cycle, we had a distribution phase, we had the accumulation, accumulation, distribution. We on the same page? We're on the same page? So what I'm going to teach you here is the market cycle continues to show itself. Can you also? All right, let's get back. Okay, the market cycle is continuing to show itself. All right, so now equal lows at the bottom. Okay, many people would call it a double bottom. Others would call it whatever it. But at the end of the day, what it actually came into? What? Yeah, you can see that price gap. Can you all see that? It's that gap. So the to present themselves because price was fair. Okay? Price was fair. Now, what's happening? Protect the high. Because they the market cycle, distribution, accumulation. Where did they come? They came back to that consolidation phase. Market cycle, they consolidation phase. All right. Now we've got equal. Remember what I told you guys about the equal highs. Okay? They protect those equal highs. Or we can see that they want to protect those equal highs. So now, that is the okay? That is the market. Now let's look over here. Right? So now what do we have? When this candle finds in 4 minutes, the 5-minute candle, okay. In 4 minutes, again, unfair price. Right? So they would want to come down to make things right. They're distributing to accumulate the market cycle. It will always present itself, bigger time frame, lower time frame, even in between two candles. Okay? There will always be distribution and an accumulation in this market. Always. That's how the market works. Right. So that things start to make more sense. Now they're a little close to the for me not to say. This is basically at your point of interests. And this could very lead to time frame point of interest. So remember what I said about highs. Price could easily take this. Believing that price is going to go higher. This candlestick, everybody's it's going to buy. Put in the comments how many people would buy here. Looking to buy here. We're coming into a new. This person, this is not equal highs. Guys, you don't understand what equal highs is not equal. Like they don't have to be exact. Okay? Understand that. They don't have to be 100%. No. These are two highs that are on the same level. Okay. So, I'd be buying. Our candle doing that? I would be buying. Buying to though. If it to unprotect that high in order to get in on a sell and protect the high that they create. Okay? Price might just go up. So we see price doing something like this. So we no longer high, and we now protect that high. And price can then sell off. Yeah. That's obviously what we're looking at here. I said, that's a point of entry. I'm going to use a time frame to get involved in on that point. There we go. I'm looking for price high. Okay, this is how it's point of interest. Okay, so I'm looking for price this high. So the next probably create these equal, right? So this candlestick to 13 minutes. Okay, that's a long time. Let's go down to a 5. So here we have a new protected high. Okay. So we have these equal lows. This being a protected low. Right? So what are we looking at? We're looking at out highs. And as price goes, that's my point, sell off. As we liquidate and take out, so we out this high, we're looking to take out this, create a new high, that high, and sell off. Am I making sense? So that I spoke about. I'm ICT's silver bullet. Silver bullets from, if I'm not mistaken, Hoppus 3 or 4. I'm not explaining that.